Hi everyone, I'm Benjamin. I'm the founder of CAP. Um, let's see how we do this. There we go. So yeah, CAP is a stablecoin protocol on Ethereum network. We're backed by mostly traditional finance institutions like Franklin, IMC, etc., as opposed to the other route that people usually take, infrastructure investors, etc. So what is CAP? CAP is a stablecoin protocol with two products. One is a digital dollar called CUSD, and the other one is a covered or insured savings product called stake CUSD. So CUSD is not itself a stablecoin. Instead, it's an account that you can mint with other payment stablecoins or money market funds. So right now we're partnering with a few of the ones you see there. But in the end of the day, everyone's going to make a stablecoin. Fidelity is going to make a stablecoin, Bank of America, maybe people in other jurisdictions are going to make a stablecoin. And it's going to become very difficult to swap between them or have fungibility. We're going to essentially lose singleness of money. And so by allowing CUSD to be minted and redeemed with no slippage or fees, people will be able to move from Benji to BitOld, from BitOld to USDC instantly, 24/7, with no slippage. And so this instant settlement is a core product of our core feature of our product. One last thing I'd mention is that because we're adding all of these assets that are regulated, that are compliant as collateral for a stablecoin, we inherit all of their insolvency safeguards. We inherit their compliance, and we inherit the brands that we're adding as collateral. We don't have to ourselves handle the fiat part, and we can stay in the smart contract world. So the second part is a covered savings product. Coverage just means that we have some sort of a mechanism to prevent our users from losing money in case something goes wrong. So how do we generate yield? So most applications today, most interest-bearing stablecoins are hedge funds, where you put money in an application and they go do funding rate arbitrage, or they deposit the funds in a T-bill account, etc. We think that that is great to have one or two strategies. But what we do instead is we go to the world's largest financial institutions like IMC, like Susquehanna, and allow them to borrow funds from us and generate yield via their own proprietary strategies. And the way that we've set it up, all these institutions are constantly competing with each other in order to generate yield. If the competition is very high, then the interest rate also increases. If the competition is very low, the interest rate decreases. And so by this, we're always, in theory, able to have the best yield. And the coolest thing, at least for me, is that we've developed a coverage model in order to protect the downside risk. If any of these institutions lose money, we're able to have some sort of recourse. We have some sort of coverage model that I'll share with you guys later. So let's look through the lifespan of a dollar in CAP. So you are a Benji holder, you're KYC'd with Franklin Templeton, and you want to earn some yield. So you go to our smart contract and you mint CUSD 1-to-1. You can do this at any time, it's instant, and anybody can use it. Then you'll have, let's say, Susquehanna that says, okay, I like that there's a lot of Benji in the collateral basket for CAP, and I want to borrow that to use in my yield generating strategies. Before I can do that, I have to go and convince some cryptocurrency holder to vouch for me. So this cryptocurrency holder has to put up ETH or Bitcoin stake to vouch for Susquehanna to then borrow from us. Once they have that stake that somebody's vouching for them, they can come to our protocol and provision a loan. So if a staker is giving them $100 million in kind of vouch, they can borrow $80 million. And if they lose the money, then we can slash, or we can get recourse from that stake in ETH. So why are we doing this? Why not just do a hedge fund or like have the usual model where the team is generating the yield? Because today we are just stuck on those three strategies. All major stable coins that generate yield for their users are either doing US Treasuries or some derivative of people leveraging Bitcoin or leveraging ETH. And it's great. I think it's really nice that we've been able to democratize these strategies to the masses. But look at everything else. The dollar is used all around the world, and so that you can do a lot with it. But because we're relying on developers to generate yield, we're leaving a lot. And so instead, what we're doing is relying on markets. We're relying on institutions to generate this kind of coveted yield for us. Now, there's a lot of demand to underwrite these kind of activities. Right now, there's a whole industry of restaking, which is called, where folks can vouch for other teams to do things, arbitrary activities, and for us, it's generating yield. Right now, there's around $20 billion in this market. What's really interesting about this market is that these folks hold cryptocurrencies that are staked. So they have a very low opportunity cost. And so the cost to convince them to vouch for our operators like SIG, et cetera, to generate yield for us is not that much. And so the premiums for the credit spreads to underwrite these loans are much lower than what you would see in TradFi for like credit default swaps, for example. Now, what does the roadmap look like? Well, we've already deployed the smart contracts, and now we're testing in production. Yeah, a little bit more about that. We're deployed on Ethereum network, so that's the only place where we mint and redeem. But we're the flagship stablecoin of Mega ETH, which is in layer 2. And yeah, after our 5th audit, we're going to be deploying. So hopefully you guys can use the application. Thank you.